Namaskar, मैं हूं CA Madhur Mangal, and today I'm going to speak on a topic GST assessment. What is GST assessment and what are the different types of GST assessment? So first of all, I would like to thank casansaar and especially Mr. Vivek Khuranaji for giving me such an opportunity to come on this platform and speak on this topic. So let us start the topic. What is GST assessment? So first assessment is self-assessment. So what is assessment? Assessment is actually a determination of tax liability of the person at how much tax the person has to pay. So assessment is necessary to determine the tax and when the person has to pay the tax. So self-assessment, as the name suggests, self-assessment. Self-assessment means the person will himself determine what is the taxable value at which he has to pay tax and what is the tax rate at which he has to pay tax, and accordingly to it, after determination of all the facts and figure, he will determine the tax liability and disclose it in the returns, and according to the returns he will pay taxes on it. So the current system of GST that is today work on self-assessment, where taxpayer himself disclose what are the tax liability of him, and he according to it pay the taxes. So the system runs on trust and judgment of the taxpayer. So next assessment is our provisional assessment. So what is provisional assessment? Like first, I talk about self-assessment, where person himself determine what is the tax liability of him, and accordingly he pay the taxes on it. So it's quite possible that a person cannot determine what is the tax rate of its goods and services, or if he has determined that what is tax rate of goods and services, but he cannot determine what is the value at which he has to pay the taxes. This can be a case because today GST is quite complicated. There are number of disclosure, number of tax rates, number of goods, but it sometimes becomes difficult for a taxpayer to determine what are the rate and value at which he has to pay the taxes. So provisional assessment is for that kind of taxpayer, in which the taxpayer will approach the appropriate officer in department to determine his taxable liability, to remind the value or the rate at which he has to pay taxes on it. So in order to do it, the procedure part is that he will find an online application disclosing all his documents, documents related to goods, or any of the further things required for the officer to directly ascertain what will be the tax liability of the person. He will approach with this online application and submit it. After it, the proper officer will scrutinize what are the information that is filed with the person. The proper officer thus has the power to also call for additional documents or information which he desired in order to compute a person tax liability. A proper officer can also demand a personal hearing in order to ascertain or correctly understand the transaction what the person is going through. So next part is, when will the proper officer issue an order? The order that first of all the proper officer will issue will be a provisional assessment order. That means within the period 90 days of issuing the request by the taxpayer, he will issue a provisional assessment, where it will be determined what is the tax that a person has to pay, at what rate and what value he has to pay the tax on it. So it is quite necessary for the taxpayer that after giving the taxes on the provisional basis, he has to also submit a bond to the proper officer. Bond is actually a binding agreement in which the person binds himself that he will pay the tax if in the future at the time of final assessment the tax liability is more then he has paid in a provisional assessment. He has to also offer a security in form of bank guarantee of the 25% of the bond amount to the proper officer. So now provisional assessment has been done, but there ought to be a time for final assessment. It is necessary as the person has to be finally assessed to the final assessment only, not a provisional assessment. So time limit of final assessment is 6 period of the communication of provisional assessment. So within the period of 6 months, the final assessment will be done by the profit officer. It may be the case that after final assessment, there is a more tax liability on the person that is provisionally assessed. So in that case, whether he has to pay more tax, yes, he will pay more tax on it. The proper officer, the proper person, taxable person, will pay additional tax on it along with the interest that is ought to be paid, pay on it. So proper person, a proper taxable person cannot just get around with the interest. He has to definitely pay the interest on the difference of the tax amount. It may be also possible that final assessment tax liability is low. The chances are very less, but it can be possible. So the less amount of taxes can also be paid on it. Under it, the refund shall be granted to the person, along with the applicable interest that is determined after 60 days of filing of assessment. So the proper person will also have to release his security as he has paid all the liability. It will be also released when the officer is satisfied, proper officer is satisfied, the person has taken all these steps, he has paid all his liability, and there is no future liability of the person. The security will be released in 7 days. So there's few argument also in against in favor of provisional assessment. Why the person will go for provisional assessment when he has option for advance ruling? The advance ruling also give us the advance tax liability and also help us determine tax liability. It's better than provisional assessment because it has wide scope, because provisional assessment only give us value and rate of determination and not further scope to determine other taxable scope only. So provisional assessment does have limitations on it also. So the next benefit of the provisional assessment is that a person can maybe not satisfied with the provisional assessment that the tax is determined by the officer. He can also move to appellate authority in case of it. Can also file an application to change the provisional assessment only. So the person can offer appellate authority, but that is not the case in a of the advanced rule. So the person does have benefit in provisional assessment. Now, the second benefit of provisional assessment is that the person will not be liable to pay future penalty on it because he has already disclosed all the information department and determined himself to determine a taxable person. So if in future there is a change in the views and change in tax liability because of any court decision or otherwise, then in that case, the person will not pay the penalty. That will be the benefit of it. So provisional assessment has very limited scope, but it can be used when the person is not sure of his tax liability. So provisional assessment can be helped there. The next type of assessment is the scrutiny of returns. So you might be aware of the cases that is today of the mismatch of the GST 2A and 3B. A highly notice are issued by the department for it. So what is the base of this? The base of those notices? The base of those notices is scrutiny of returns, because the department has power to issue the notice on basis of scrutiny of returns in it. So scrutiny of returns is done by the department. So what is scrutiny of returns? In this, the proper officer, after filing of the returns by the registered tax payable, will determine on the basis of information already available with him that what is the liability of the person. The information can be sought from 2A, 2B, GST1 of the GST1, or on the basis of e-way bill or other departments, departments like income tax, MC. On the basis of it, the scrutiny of returns can be done by the proper officer. And after determining the discrepancy, if any officer has found one, he will issue a notice to the person demanding the tax and the applicable interest on the difference of returns. The taxable person does have the opportunity to reply against it. He will be given a 30 days period for it, that he can just reply to the notice. What proper person can do, what a taxable person can do in this case, taxable person can reply back to notice, and if he is not satisfied with the assessment, he can make a reply and submit to the proper officer that he is not satisfied and what are the reasons and other proofs with him that has made him that as a scrutiny of returns that is done by proper officer is not correct. It might be the case that there is definitely a correct discrepancy in the return and the taxable person has admitted it. So in that case, he will pay the applicable tax and interest as determined as submitted to the department. So proper officer, if satisfied with your reply in case of discrepancy, then your scrutiny of returns will be stopped. Otherwise, if the proper officer is not satisfied and he thinks that you have not paid the tax that is ought to be paid, or you have not corrected the return in the month when the notice was issued, have you not adjusted the excess tax liability, he may move further. The proper officer here cannot just take action against you on basis of scrutiny of returns notices. He has to go for other sections. That other section includes conducted department audit, audit by the chartered accountant, inspection, inquiry, or investigation. Or he can move towards section 73 or 74 for the recovery of the tax, interest, and penalties also. So there is one very high matter in the scrutiny of returns, that it allows a person to correct his mistake in the month in which the notice is issued. But currently, the section 39(9) says that a person cannot correct the return, any omission or error, which is seen by the proper observer our scrutiny investigations on any of the departmental inquiry. So a proper person cannot correct his return. In that case, he cannot set his liability. In that case, there is no other remedy to the flexible person other than going for the further section, that is 73 or 74. So action can be initiated in case of scrutiny of returns because of this discrepancy in sections. So next is assessment of non-filer of returns. So how the assessment of non-filer of returns will be done? Non-filer returns is done a person if fails to furnish a return under section 39 under section 45. Section 39 calls for GST 3B, GST 4. Section 45 calls for GST 10. So if a person has not filed these returns, a proper officer can issue a notice to the person that he has to file a return within the period of 15 days of issue of notice. If a person failed to do so, the proper officer can himself initiate the action against the person and determine the tax liability of person on basis of all the material in hand and issue assessment order. So proper officer can go for judgment basis on basis of it if the return is not filed by taxable person in the proper time. So there is also a time limit for the officer to issue a notice in it. The time limit comprises of 5 years from the date of issue of from date of last date of the annual return of the period where the annual return of the period where the notice is issued. It means that the last date is 31st December. Then after 5 years of the relevant date, the officer can issue a notice under this system. So assessment order can be withdrawn when the proper officer issues assessment order. It can be withdrawn if a person files a return within the period of 30 days. If the person files a return within the period of 30 days, then the assessment order will be withdrawn. But in that case, a person has to pay the interest. The person has to pay the late fees as well with the returns. So if the person does not do any other thing, department does have power to attach his assets and also cancel the registration under this section. The next types of assessment is assessment of unregistered persons. Who are the unregistered persons? The unregistered persons are those who has to take the registration in GST, but they have not taken the registration. The liability stands for taking the registration, pay the GST, but they have not paid. The next is registration is cancelled under section 29, subsection 2. The registration of the person is cancelled under section 29(2). That may be the cases of if the person has taken the registration on basis of fraud, willful omissions, the proper officer can cancel registration. It can also be cancelled when the person has not started a business after taking voluntary registration after 6 months, or the person has not filled the returns for a period of 6 months in case of regular GST number, or in case of 3 consecutive tax periods in case of composition person. So his registration can be cancelled. In that case, the proper officer, the person cannot know what is the tax liability on the person. So in that case, proper officer in best judgment basis will calculate tax liability of person and issue a summary assess for referral. So in that case, person has to pay the taxes on it. A proper person can also have remedy of 15 days of giving the proper reply to the notice of paying the taxes on it. So proper can respond with the 15 days to reply to the notice as well. So the best judgment assessment, if taken, then what does it mean? Whether the proper officer can take information from wherever he wants or arbitrary basis? No. Best judgment assessment works on the trust, proprietary, legality angle. It means the proper officer has to take a proof from relevant sources in order to determine the tax liability of the person. So next is summary assessment. What is summary assessment? Summary assessment means if the proper officer thinks that if he delay the assessment of the person, then it can be a very detriment or a very harm to the interest of the revenue. Then in that case, proper officer can issue a summary assessment with the prior permission of the additional commissioner or the joint commissioner. He can do it. Then the proper officer will issue a summary assessment, determine the tax liability of the person, and he will issue notice on it. So summary assessment is actually a fast track assessment case in which a proper officer take a fast track assessment and on basis of it assessment is made. Otherwise, if the proper officer will go for section 73 or 74 for recoverability of tax, then it will take time and he may need to issue so-called notices and other procedure, and it may harm the interest of the revenue. So summary assessment is done only after due permission of additional commissioner, joint commissioner. When the commissioner is satisfied, then delay in order can harm the interest of the revenue. So in that case, summary assessment is issued. Summary assessment can also be withdrawn only in the cases when the joint commissioner or district commissioner think that the order was erroneous and it was not right, or the officer or the taxable person has replied to the notices within a period of 30 days. So in that case, the summary assessment order can also be removed. So thank you everyone. This was all from my side. I explained you all about assessment. So in case you like my video, please like, share, and subscribe to the channel. And also pass comments or any of the query related to this. You can write on it. You can reach me with the following information: Facebook as well as email address. Thank you very much, and please watch the channel again.